Good afternoon, folks, from Nairobi for our, I think it's our fourth EGM update about the markets. Kevin, good to see you again.
As well.
Kevin, I mean, each time we think it cannot be surpassed, it's surpassed by the next time. Tell us where it's all started and where you actually told us at 525.
This is where we are on the lira. Of course, it's been our theme currency for the whole week. We started having a conversation at 525 levels. Now it's not even on our graph. We're now discussing the 7, 6.
We popped up how high?
We went as high as 7.1. Yesterday, the president had another speech. He's been having all these public lecture series, and he says that he's not going to fall for the interest trap, which is essentially what the market is asking for. There was a Bloomberg survey where they asked the banks how many basis points or
500,
1,000 as in some quarters are asking for, and that's what he doesn't want, because he's very keen on improved fiscal infrastructure development.
But from a trading perspective, if he doesn't do what the market wants, doesn't the Turkish currency just continue to get weaker?
It does. We saw as high as 7.1 this morning. Then the Turkish central bank injected some liquidity.
That's probably that rebound then here.
Yeah, just rebounded a little bit.
Yes.
So it pulled back just a little bit because of injected liquidity. They sold a bit of dollars just to be able to try and fight that exacerbated move. But what's more important is, we discussed this on Friday, which is the contingent risk that we are facing. And I want to bring up the Rand curve.
This was just extraordinary. I think that was a 10% move.
10% move in Asia markets. Extreme moves that we are seeing. The last time we saw this sort of movements, you're looking at June 2015.
Wasn't that when there were resignations of
finance ministers? And then here was Ramaphosa happiness when the Rand appreciated. But that's all been unwound. And this has just happened, if you look carefully, this has just happened over the last...
In the blink of an eye.
In the blink of an eye, because we were trading 1292 for the better part of 2018. And then now we've dropped 10%. So all of you Kenyan holiday goers,
it's time to go to South Africa, and it's
this
a very
is the time to pay for your tickets and holidays, because I think this would be about 6.3, 6.4 against the shilling. So 6.4 shillings to the Rand. 10% depreciation without the shilling having been affected means that you can save 10% of your travel.
Kevin, I'm glad you're mentioning the shilling, because you know, if you look at the shilling, I was looking at it over the weekend, third best performing currency in the world. Now,
very interesting
observation. And on a trade weighted basis, it must have moved so dramatically against some of these weaker.
Yes.
So I mean, really, it's worth just noting that.
It's worth noting that, and also, it's important that you just have a look also at another currency that has taken a bit of a hit. This is the Mexican peso.
This was, Trump was bashing this all last
year in 2016. If you look at 2016, that's when we're talking about the infamous wall building.
Yes.
And so we came back, we're back up on that. And I think this is the opportunity that EGM offers, is that before you couldn't get into an exposure in Mexican peso. But today you can run a trifecta currency play where you've got the Turkish lira, your long dollar against the Rand, and long dollar against the Mexican peso. And you could possibly see some interesting EM currency pair movement and see where the correlations are. And that's what we at EGM are able to offer.
Do you think this trend is to continue? Do you see it? Or, you know, do you think we've had a very dramatic...
I think it's a bit of a knee-jerk reaction. I would want to see... Okay, let me say this specifically for the lira. I think it's fundamentally weak. As I told you earlier, there are structural issues on that.
So stay short the lira.
Stay short the lira. I'll probably look at some sort of recovery on the Rand right now. Look at further buying opportunities. I haven't, to be honest, looked at it in detail, but I think there is probably going to be a pullback because there's a bit of a knee-jerk. When Europe and US opens, they're very active traders of the Rand because it's fairly more liquid than the Mexican peso as well. So I would expect to see a bit of a pullback there, a bit of profit taking from the Asia movements as well.
I mean,
I'm
have
going to
we
open
ever
a demo.
seen that?
I
That
mean,
was
this is just-
unprecedented.
It is,
And
it
we've been
is,
sitting
it
here
is.
talking about it.
One of the things that we're going to do is we're going to open a demo account where we'll take positions in these EM currencies. We'll probably take another 3 or 4 emerging market currencies to see whether this contagion play is actually going to be sustained. And we will observe that over the next 3 weeks and see how it plays out.
I wish we put our money where our mouths were.
We should have.